Good morning to all. So the topic for this particular session is customer engagement and customer onboardings. So digital banking has permeated our daily lives in ways that were once imaginable. In today's world of cutthroat competitions, every interaction with the customer is significant because it affords you the chance to leave a lasting impression. Almost all of the world's largest corporations believe and practice this philosophy. In the financial services industry, the customer is always the focal point for all core operations. Financial institutions are continually attempting to innovate and develop more effective methods to attract and retain customers. However, it is not without difficulties, as customers today expect an omni-channel experience and superior real-time and convenient banking experience at the click of a button. The ongoing digital advancement and tailor-made niche products available on the market have placed a great deal of pressure on financial institutions to develop unique, innovative products and services that focus solely on customer satisfaction by streamlining the customer onboarding processes. Customer onboarding is crucial as many key variables such as experience, referrals, client loyalty, profitability directly depend upon it. In the current process, there are multiple parties or departments involved which are within the organization like credit, IT operations, compliance, legal, front office, risk department, tax, and other important touch points within the various departments that are required to finish the entire onboarding process. Thus, to ensure that the customer onboarding process becomes smooth, it is imperative that the banking industry focuses on developing and implementing a complete end-to-end client lifecycle management solutions. With the implementation of such end-to-end client lifecycle management solution, we can anticipate customer loyalty and retention, thereby driving sales and business growth. Customer retention is far more difficult and time-consuming process than acquiring new customers. Importance of customer onboarding. Customer should be at the heart of every business, as we know. For a business to be successful, it must revolve around the needs and expectations of customers. Every organization should always prioritize providing customer with best possible experience. A positive onboarding experience has a huge impact on the relationship between the customer and the institutions, as it gives validation to customer choice to buy your product. It impacts whether the customer turns out to be loyal or churns in a couple of weeks. It also helps business retain their customers and expand commercial opportunity. So customer onboarding is essential because it sets the tone for the customer and encourages them to move forward in their relationship with the organizations. The studies show that customers are willing to pay more to companies that serve them better. Some reasons that validates the importance of customer onboarding are: it keeps the customer engaged, helping your customer understand and reminding them of the value-added services to their life from the products you are offering is essential to keep them engaged. This will give them an incentive to use your products frequently and increase the trust in your brand. It increases customer loyalty. If customer encounter barriers while trying to complete the first purchase or while setting up your products, they will likely get frustrated. As a financial institutions, one cannot afford to wait and expect customer to contact when they need support. With a smooth customer onboarding process, we can guarantee that customers will get high value services from the products, knowing also how to solve potential problem quicker and more effectively. It increases the customer lifetime value as well. The customer lifetime value refers to the revenue that a business gets from a customer throughout its relationship. Since acquiring new customer is more time consuming and expensive than retaining new ones, brands must look for a way to increase the lifetime value of the existing customers. This can be done by ensuring an effective onboarding process, which ultimately drives company growth as well as maintains profit margin. Next, customer onboarding process decreases the customer churn rate. If your customer tend to stick around for long run and keep paying the subscription fee, that means the churn rate is low. Creating a successful onboarding experience is important to keep your customers around for longer period of time, thus reducing the churn rate. It results in lower execution cost. An intuitive and practical onboarding process ensure a steady stream of returning customers, lowering execution cost. If brand have a consistent revenue stream from recurring customers, they don't have to invest huge amount of resource into converting new leads every month. It leads to word of mouth marketing. When customers have a positive experience with a particular brand, they are likely to talk about it with their friends and family. A word of mouth is essentially free marketing that can have an extremely high conversion rate. It reduces customer queries. When customers are greeted with a positive onboarding experience, they normally don't have as many queries about the product. Providing assistance and necessary information before they is a part of an excellent onboarding process. So now I'll be talking about the channel and processes of customer onboarding process in banks. So first step, onboarding request. Second step, data capture. Third step, due diligence. Fourth step, legal documentations. Fifth step, customer account setup. And the last one, customer interaction and certainly after service. In an era of heightened customer expectations, banks that deliver friction-free onboarding experience have an instant competitive advantage with respect to the peers. The digital onboarding process is the key to increase the conversion rate and improving the user experience. At the same time, it meets the strictness regulations of anti-money laundering, KYC, that know your customers, and drastically reduce the cost, boosting productivity and eliminating the barriers and waiting times. So after customer onboarding process, certainly the other important parameter is customer engagements and its benefits. In banking, the ability to shift from a transactional mindset to an engagement mindset has become very crucial. Regardless of whether the customer is digital savvy, a branch-based customers, or a combination of both, the ability to provide contextual products, services, and recommendations is the basis for building a stronger relationship and generating more revenue. It is through customer onboarding we can ensure a smooth engagement journey of the customers. Before an account is open, the customer experience engagement process begin and continue throughout the entire customer journey. Banks can engage with customer on a personalized basis via direct mail, social media, mobile banking platforms, websites, and any other channel where contextual interactions occur in order to create more positive experience. The most vital aspect of customer engagement is facilitated by the power of new technologies and digital tools. From monitoring transaction and customer inquiries to requesting insight into financial objective, listening fosters rapport, enables a business to provide a customized solutions. The key benefits of good customer engagement also includes customer acquisitions, customer retention, new revenue channels, enhance emotional connect, expanded revenue in traditional channels, increased profit margins, etc. In the current banking scenario, technology is the driving force behind customer engagement. Customer information serves as the fuel and the modern engagement platform where we use the artificial intelligence powered tools and internal external data to automate interactions, thereby creating a personalized experience that encourages a prospect to open an account and further deepen their relationship. The beauty of combining data, advanced analytics, modern communication platform is that we can anticipate customer needs, build new products accordingly, and services for micro segments. And certainly we can retarget potential customers in real time. Some of the key initiatives taken by Bank of Baroda to drive customer engagement is like launch of Bobble Super App, harboring 95% of retail banking services. Launch of Bobble Gold feature to provide personalized banking services to senior citizens. Launch of premier segment debit cards with bespoke propositions, Bobble Opulence in metal edition, Bobble Sapphire with him and her version. So to acquire, convert, retain customer as well as transform them into the brand advocates, we must engage them across channels and over time at each opportunity that creates value for your customers. The objective is to establish an appropriate, effective, and meaningful connection with one's target audience. So certainly we have to understand what sort of new trends are there, technology are there. So further we can improve the customer onboarding. And we know the continual service improvement is the mantra for the survival as well as meeting with the all peers and competitions. So one very important thing is NLP powered AI chatbots. With the help of conversational AI chatbots, the onboarding process can now be more automated, which results in a better customer experience, increases revenue in a shorter time for the financial institutions. A multilingual conversational bot can verify the user identity, answer their queries, gather the relevant data, automate the process, and give update or reminders. Human plus artificial intelligence. Artificial intelligence recommendation engine helps banks to engage with the customers with right product recommendations at the right channel at the right time based on the historical data captured. The AI-based recommendation engine uses predictive analytics and big data to create personalized moments across customer interaction across channels. So account aggregator and its benefits on the customer journey. We can say this India launched account aggregator framework in September 2021 to ease the accessibility of the financial data and boost financial inclusion. And since its launch, 6 account aggregators have been given an operating license by the RBI. 8 entities have been given in principal approval. As of August 2022, almost 22 major public and private sector banks, including all 12 public sector banks, have joined the framework, bringing 1.1 billion accounts in its fold. The framework provides easy and instant access to financial information of customers in a safe and secured manner. Being able to access this data very secure enables the banks to build new customer-friendly journey in lending, credit monitoring, wealth management. The information comes from the trusted source, is completely digital, leading to customer delightness and operational efficiency. So there are certain key benefits for the customer. The unique selling proposition of this framework is that the customer financial data, which is dispersed across numerous banks, insurance, mutual funds, other institutions can now be consolidated under a single digital framework, making it easily accessible. In a typical scenario, the customer must share their banking information with other banks or financial institutions using hard copies or certain set of other formats of documents, which requires significant efforts. However, the account aggregator framework makes it very simple for customer to share information either once or repeatedly for limited time. In addition, the framework permits customer to revoke their consent at any moment. Account aggregator provides a secure method for sharing information based on core design principles of customer consent and data privacy. The data shared by account aggregators is encrypted by the sending financial institutions and can only be decrypted by the receiving financial institutions. So end-to-end encryption makes the process significantly more secure than the exchange of physical documents. Bank of Baroda rolled out digital loans through RBBI regulated account aggregator framework in October 2022. So joining the likes of SBI, ICCI, HDFC, Axis Bank, among others. With the adoptions, Bank of Baroda existing as well as the new customer can apply for a digital loan using the bank's mobile app and website in a completely digital and paperless mode, which means that the customers don't have to manually sign and scan or send any physical documents for availing loans. As the framework offers multiple benefits ranging from giving customers greater control over their financial informations, enhanced customer experience to fraud prevention and better monitoring capability. It can act as a facilitator for digital lending and simplify complex loan process by facilitating the sharing of reliable and high quality data regarding a customer bank activity, cash flow, systematic payment behaviors. By observing alternative data points and behaviors, financial institution can now evaluate the assets, financial behavior, and make a more informed decision regarding the extension of the credit lines. So the account aggregator form has the potential to disrupt customer journey, where data-driven real-time decision-making can create a competitive advantage. Since the account aggregator data is system-generated, accessible in real time, it can significantly reduce the cost associated with the data-driven innovations. Fintech can enter the domain of incumbent banks to provide innovative products as well to underbanked communities and enhance existing customer offerings. So with this, my request to all the participants of this hackathon is to get advantage of such session, and I can request them to participate more and more in this all ongoing sessions and certainly give their feedbacks. Thank you.